Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Carson here with a breakdown of the action in today's session, where it was a strong day and the index is clearing key technical levels. But Ed, we were scraping for stocks to talk about.
Yeah, it was a little interesting. I mean, it was broad-based gains, but the leading stocks weren't really leading the way. But definitely some nice action today. And I want to take a look at Li Auto, which did not have a good day, Flex LNG, which is setting up reasonably well, and Synopsis in sort of the chip design play.
All right, we'll take a look at those charts here in a bit. But first, let's take a look at the major indexes. So the NASDAQ today up 3.1% by session's close, only outpaced by the Russell 2000, which was up about 3.5% today, Ed. We have the S&P 500 up almost 2.8% and the Dow up 2.4%. So broad-based gains here. And the NASDAQ getting above key resistance that has been a struggle even recently, hitting resistance there, but does today mark a significant change in tone, Ed?
Well, it's certainly hopeful. I mean, but you can get a situation. We've got not only above the 50-day line, which we have struggled to do for quite a while, and sort of getting some there, but also getting above the late June, early July highs just a little bit. Now, the other major indexes didn't necessarily do that, or they came up to it. So that's hopeful. I mean, we've done it before where you can peak above, you know, these levels and then come back down. But late March was sort of an extreme example where we actually got above for a few weeks, then hit resistance at the 200-day line. But, you know, so that's just like now, like if we could decisively clear that area, then I think you'd feel confident. I mean, I understand if investors want to be adding a little bit of exposure. There wasn't a whole lot of stuff to be adding to exposure today. But if you do, just remember that we could, with earnings really heating up and with the Fed meeting next week, things could reverse pretty quickly. So if you do step up your exposure, you definitely want to be ready to pull back pretty quickly.
Yeah, the hokey pokey market, right?
It's definitely
put the one foot in, got to be able to take it out quickly. And, you know, Ed, even more clear cut seemed like the Russell 2000 getting above key resistance levels and the strongest index here today. So your take on what we're seeing in the small cap area.
Yeah, that was nice action. I mean, there are banks and some energy names are doing well. Also, small caps don't have as much exposure to the strong dollar, which in general, that could hurt a lot of the big multinational companies with their earnings this time. But yeah, it's nice to see. So, you know, NASDAQ is coming up. The small caps are coming up. Some of the growth areas, I mean, this is also a proxy for breadth. This tells you sort of how, without having to look at the numbers, you've got a pretty good idea. And as you say, yeah, it's sort of a trending higher, you know, or at least close to it, higher lows, definitely on the NASDAQ, higher lows. So there are some positives. It's definitely, you know, you wouldn't want to be shorting this market, that's for sure, right now, because things are trending up. So definitely positive.
The coast isn't clear, but definitely positive.
Yeah, it's just tough. We're sort of peaking above those levels. You can do that, and then you know, it's sort of like, can you break through the gates, and then can you keep on making that charge? And we've done that after yesterday's nasty reversal. It's just that doesn't mean the coast is clear. And even if you do get the decisive move, it's just another resistance level coming right up. There's 12,000. Then there's the June highs, the early June highs. So there's a lot of resistance. There's a lot of places where this market may stall or move sideways again. So it's not a market to going crazy in. If you know, it's a market to maybe be playing in, you know, taking advantage of some things, but also not to get too excited too.
Absolutely. Okay, a quick check-in on the S&P 500 and Dow as well as your S&P 5 for the S&P 500 in Market Smith. So closing looks like a little bit, no, I thought it was a little bit lower than that, but it was a little bit higher. So it did also get above its 50-day line and looks like right around or just under its high from the 28th of June, but getting there. And a look at the Dow as well, also pretty close to its late June high. And back.
Yeah, so there's you know, definitely positive. And so that's why, while yesterday's action wasn't positive, it wasn't like, oh no, it's over. It was a reversal. Again, it's like a battering ram. Sometimes you never see in movies, a battering never comes up and knocks through the first time. And obviously you could say, well, we've been battering against this all year. And but so it's definitely nice to see us at least get through there.
Okay, and next, let's take a look at chip stocks by SMH. This is the semiconductor ETF. So notable to see SMH getting back above its 50-day line because this group really lagged in terms of finding a bottom, whereas the broad market was trying to find lows a little earlier in June. This one didn't have its short-term bottom until early July.
Yeah, and so that was a really negative sign because it's hard to have a real rally without the chips involved. Look, obviously we've gotten above the 50-day line a few times, and that doesn't do much. Like this is a pretty clear cut where we get above and then fall back. But really nice to see that. It's just another symbol sign of some strength. Will it carry through? We got a lot of earnings in the next week from chip makers, but definitely positive there.
And Netflix out tonight, so we'll check in on that before we wrap, Ed, and get your quick take. But let's also take a look at IGV. This is the broader technology and software ETF, up 2.8% today. It too trying to get back above the 50-day line. A pretty clear area of resistance in the past, so maybe a little bit too early to tell if this can really start gaining momentum because it is still below its highs from early July, late June.
Yeah, a lot of laggards, a lot of things. It's coming above. It's nice the chips and the software both moving together, but there's so much repair work that needs to be done.
Absolutely. Okay, well, let's take a look at a stock that didn't have quite as hot of a day today, but it did close well off of its lows, and that is Li Auto, ticker LI, closing down about 4.7% today, but it was off by more than 8% at one point in the session. So did manage a comeback here. At the closing range was right around 45%. So positive in that sense. Also closing above its lows from mid-July with that potential entry there right at the 21-day line, a bounce there. But this is a very tricky stock right now, even for short-term traders. Seems like maybe for those who got in early when the stock first got back above the 200-day line, you can give this one a little bit of room. But those who bought recently, this is not for the faint of heart. I mean, to see a decline of over 8% intraday, it did come back by the end of the day, but some wild action.
Yeah, and I bet most people who bought off of that bounce off the 21-day line, which was a nice move, probably are still underwater because they probably had some kind of bounce. And the drop from Monday's high, that was, the drop, there was a well over 10% from Monday's high to Tuesday's low. So that's pretty harsh. An example of why you want to take some profits, even on a leading stock. Even, there was reasons to be, when this thing peaked, the market was moving up to the 50-day line yesterday. There was people were bullish at the open yesterday. So there was reasons, but yeah, you have to take some profits. This is one now at this point, you probably want to wait to see, hey, can form a new consolidation.
Right.
It's about a little over 4 weeks into a base. Give it to the end of next week. It'll have a new base, presumably, if it doesn't break higher or break, sell off really sharply. And that would provide a safer opportunity. We're finally getting the 50-day line and the 10-week line to get somewhere in the same universe as, as the stock. I mean, it's still way above, but
yeah.
A couple more weeks and you could imagine that at least closing the gap somewhat.
Yeah, I think that would be ideal with such a strong move that it made since that earnings report in early May. It deserves a rest, and maybe that's what it needs. Who knows? Maybe this little consolidation will ultimately work, and the 21-day line will be that support level for the stock for its next leg higher. But I think ideally it does pause here a little longer and lets that 10-week line catch up. I'm with you there, Ed. And let's also take a look at FLNG. It's been a little while since we focused on oil and gas stocks, and this is in the liquefied natural gas space. It's working on a couple of up days here in a row, and its trading range has tightened a bit over the last couple of weeks. And a lot of stocks in this sector did break below their 200-day lines. Flex LNG has been able to hold above it.
Yeah, I don't want to go crazy here because it's a tricky situation, but you can it's basically farming another base if it doesn't have one already on a weekly, and so there's that kind of situation. It's holding above the 50-day line. Not many are doing that. It was interesting. The news today you would have thought wasn't as positive because Russia sounds like they are going to turn on the pipeline again that they shut down allegedly for maintenance for a few days. They're supposedly going to turn that back on, which would mean less demand in Europe. But there's still going to be so much demand in Europe and Asia over the foreseeable future that there should be a lot of strength for FLNG. It's basically been consolidating for several months. It does have a new base on a weekly chart. So this is one to watch because if energy does well, this is the one that's standing up, whereas a lot of others are broken down well below the 50-day line, breaking down their 200-day lines. This one is holding up. So have to be watching for it. But I think there's a lot of positives in this one.
Mm-hmm. And I just want to take a quick look at the monthly chart. I mean, this stock has been running. I mean, this was a little bit of a base here at the end of April in 2021. So it's been over a year since it's really been on a kind of growthy kind of stock move, and even longer from the lows. Is there any concern to this being in its later stages potentially of a move?
I mean, it could be. I mean, it's like there's always that issue. It's had a big run, so it could have an extended pause. It's just that the fundamentals are so different from 2020. I mean, all these things were so cheap at the time, and while it does seem like there probably should be, I mean, the numbers aren't as great as some of the others, and so that is one issue to be looking at. Why aren't the numbers, stronger going forward? Given the big, there have been some good numbers, but why aren't there strength there? So that's something to watch for. But you could imagine if this one consolidates a little while longer that it could have another run.
All right, we'll have to see. And let's also take a look at SNPS. We mentioned the chip sector towards the beginning of the show, and this is on the design software side of chips, working on a long consolidation, trying to peak above a trend line here. Now, Ed, this seems like a company that's definitely in the crosshairs of a very important group right now with such demand out there for chips.
Well, I mean, chip demand, one of the issues is that it's curious because chip demand seems like it's been weakening in the last few months, and that's why the chip stocks have struggled. So Synopsis and maybe its group mate CDNS, those are setting up pretty well. This, it's one of the few things that you could say is in the chip sector that's above the 50-day and the 200-day moving average, as it's breaking this trend line or right on this trend line, and the RS line is at a new high. So this is arguing that's like right there where you could start making a case for it. Again, there's going to be a lot of earnings in the coming weeks from chip names, including CDNS has earnings next week that could influence Synopsis. But if you're looking for something in the chip play, if you're looking for growth, this has strong fundamentals, and it's actually performing much better than almost anything in the traditional chip space.
That is so true. Even though we're starting to see NVIDIA potentially turn and some other stocks, those charts aren't very pretty, and
no.
they haven't led for quite a long time. So Synopsis making a case here for a potential aggressive entry. All right, Ed, as promised, let's just take a quick look at Netflix here, see if that might tell us anything about what to expect in the market tomorrow. Of course, overnight action doesn't always translate to the regular session, but the early reaction here to Netflix report, stock up about 7% after hours. Your thoughts?
Yeah, it looks like their subscribers fell by a little under 1 million. That was a lot better than their estimate for 2 million subscriber loss. Now, maybe spreading out Stranger Things between the end of Q2 into Q3 will make that better.
There you go.
And they beat on earnings as well. So the stock is up nicely right now. We'll see, but you've still got a long way to go. And I don't know what this means for other companies. Maybe this is good news for Disney Plus or Roku, but I don't know if this means much for Facebook, say, or Tesla or Apple. But it's definitely a positive sign. You can see the last 2 quarters have not been good reactions for Netflix. So I think people would be happy just to see some kind of positive reaction to the quarter. This one does move.
And with the big tech earnings week coming next week, it seems like because as we've talked about a lot, it's more important that reaction to the news. That's the real big focus that we have, in addition to the news itself, which is important to digest and to understand when making decisions as investors. But if we start seeing more positive reactions in this earnings season, could that provide fuel for a rally?
I think that'll be huge for the rally this next couple of weeks, because it's the earnings and the guidance. What are companies saying? Okay, they're seeing this turn in the economy and inflation. They're really facing it. How well are they handling it? Now, and the guidance may not always be great, but the market might react positively to it. So I think there's a lot of uncertainty going into this one. So if we have reasonable guidance coming out of this season, you could see a lot of positive stock action.
All right. We will be on it every step of the way. I know, especially you, Ed. So follow Ed on Twitter. Continue to follow this show, and make sure you're tuning in to IBD Live, investors.com/IBD Live, our daily morning live stream where we are looking at stocks in real time, the first 90 minutes of trade, providing you that analysis you need to stay in step with the market and make those trading decisions to make you a better investor. So we'll see you there tomorrow morning, investors.com/IBD Live for all the details. We'll see you then, and we'll see you right back here tomorrow after the close.